CIFR stock just continues to surprise the market. On Tuesday, Cipher Mining, ticker symbol CIFR, pushed higher again, gaining 54 cents, or about 2.6%, to trade around $21.08 by mid-afternoon. Now, that may not sound like a huge move on its own, but when you place it in context, it's actually a continuation of an extremely strong stretch for Cipher Mining. The company has spent the last several weeks rebounding sharply from that temporary pullback that followed Google's 5% warrant-based investment. And the fact that it's back above $21, holding those levels with conviction, tells you that investor confidence hasn't gone anywhere. So, what's driving the move this time? Well, it looks like several overlapping catalysts are reinforcing each other. The first and most immediate one is institutional accumulation. In a recent filing, Thames Capital revealed that it added roughly $15 million worth of Cipher stock in the third quarter. Now, that's not a small position. When funds start building those kinds of stakes, it usually signals that they've done their homework, they see long-term potential, and they're willing to ride out short-term volatility for the bigger picture. And the market has taken notice. Institutional activity brings credibility. It tells other investors, retail and professional alike, that this isn't just a speculative crypto mining play anymore. Cipher Mining is increasingly being viewed as a legitimate infrastructure story, bridging two fast-growing worlds, Bitcoin mining and artificial intelligence compute. That brings us to the second factor, the narrative itself. Cipher has been very smart in how it's evolved its identity. What started as a pure-play Bitcoin miner is now becoming a broader data center-powered infrastructure company. The firm has been pivoting toward high-performance computing, or HPC hosting, and that's a big deal. You may remember the headlines from late September when Cipher signed that 10-year hosting agreement with Fluidstack, a company backed by Google. Under this deal, Cipher will host AI-oriented workloads across its facilities, leveraging its existing data center assets that were originally built for crypto mining. The genius of this move is that it gives Cipher a natural hedge. When Bitcoin prices are strong, mining revenues surge. But when crypto cools off, those same machines, facilities, and power contracts can be repurposed to host high-performance computing for artificial intelligence workloads, which is a market expected to grow exponentially over the next decade. So, while some investors still think of Cipher Mining as just another miner, the company is strategically positioning itself as a hybrid AI and crypto infrastructure company. And that's exactly the kind of story that institutional investors, like Thames Capital, want to be part of. The third factor helping push CIFR higher today is the improving technical backdrop. Cipher's stock has been forming a very clear uptrend since early October. After that brief dip into the mid-teens last week, it has consistently reclaimed higher levels with strong volume. Breaking back above $20 was a key technical milestone, not just psychologically, but also algorithmically. Once a stock breaks through a round number with strong momentum, trading algorithms and quant funds often pile in. That creates a cascade effect where momentum reinforces itself. And in Cipher's case, that's likely what we're seeing play out right now, a combination of human enthusiasm and algorithmic confirmation. Adding to that, Cipher's composite rating from Investors Business Daily just climbed to 96, which is near the top of all publicly traded stocks in its peer group. That metric combines earnings trends, relative strength, and technical performance. And typically, when you start to see that number in the mid-90s, it's a strong signal of institutional accumulation behind the scenes. So, between the Thames Capital disclosure, the strong composite rating, and continued technical breakouts, Cipher Mining is ticking a lot of the boxes that attract fresh capital. Now, it's worth noting, there hasn't been a brand new press release from the company this week. No new deals or major updates beyond what's already known. But in markets, silence can sometimes be bullish. It means that the narrative is doing the heavy lifting. Cipher doesn't have to issue a new announcement every other day because investors are still digesting the significance of what's already been revealed, especially that long-term Fluidstack partnership. This is a company that has quietly redefined what a Bitcoin miner can be. It's no longer just about mining blocks. It's about monetizing power, infrastructure, and compute. Cipher's edge lies in its ability to deploy those resources wherever the demand is highest, and right now, demand for AI compute is absolutely exploding. There's also a broader macro element at play. As markets stabilize following the Fed's recent rate cuts, growth-oriented tech and AI names are starting to lead again. Risk appetite is improving. And while Bitcoin has traded sideways for a few sessions, it's still hovering around supportive levels, providing a steady tailwind for companies like Cipher that have direct or indirect crypto exposure. So, today's rally isn't happening in isolation. It's part of a wider rotation back into high-growth sectors. The difference is, Cipher is riding two waves at once, AI infrastructure and crypto recovery. And that dual exposure is extremely powerful. Now, let's talk about what to look for going forward. Cipher's challenge from here will be execution. The AI hosting model is still in its early rollout phase. Investors will want to see progress updates, things like utilization rates, revenue diversification, and any potential expansion of the Fluidstack relationship. If the company can demonstrate that AI hosting contributes meaningfully to the top line, we could easily see continued re-rating from the market. There's also the question of new partnerships. Google's indirect connection through Fluidstack has already given Cipher credibility, but investors are speculating that other major tech firms could follow suit, particularly as demand for GPU hosting outpaces supply worldwide. Technically, the next level to watch is $22. That's the next potential resistance zone after today's push above 21. If the stock can clear and hold that level, it would mark a fresh breakout, one that could attract even more momentum traders and algorithmic buying. At the same time, Cipher has built a strong base of support in the 19 to 20 range. So, even if there's short-term consolidation or profit-taking, it would likely be viewed as healthy rather than concerning. From a sentiment standpoint, it's also encouraging that Cipher is showing resilience after insider selling earlier in the month. When insiders sell, stocks often take a sharp hit. But in this case, the market quickly absorbed that pressure and pushed back higher. That tells you there's demand underneath, demand that goes beyond short-term traders. So, what's the bottom line here? Cipher Mining's Tuesday strength is not about a single headline, it's the convergence of several forces. Institutional buying, technical strength, AI exposure, and broader market momentum are all aligning in a way that's building confidence among investors. When you see a stock consistently hold gains after multiple rallies, even without flashy press releases, that's usually a sign of real conviction behind the move. Cipher Mining has become one of those companies that's quietly emerging as a market favorite among growth and AI infrastructure investors. And while it still has volatility, as all crypto-linked names do, the difference now is that its story isn't tied to Bitcoin alone. That's the key evolution here. The company has diversified its future. It's no longer a one-trick miner at the mercy of crypto cycles. It's a flexible energy-driven compute platform that can adapt to whatever trend dominates the next decade, whether that's blockchain, AI, or something in between. So, as we head into the rest of the week, the main thing to watch will be follow-through volume. If CIFR can continue trading above the $21 mark and attract sustained buying, it will confirm that this isn't just a short-term pop, it's the start of another leg higher. And if the company delivers any operational updates or fresh hosting news in the days ahead, that could easily serve as another catalyst to push the stock further into new high territory. For now, though, Cipher Mining continues to do exactly what investors want it to do. It's holding gains, attracting institutional money, and proving that its hybrid crypto plus AI model isn't just a buzzword, but a scalable business strategy. If the last few months are any indication, this stock might just be entering a new phase, one where the story shifts from speculative miner to infrastructure powerhouse. Cipher Mining's journey is far from over, and the fact that it continues to build strength day after day makes this a name worth watching very closely heading into the back half of the week.